Hey everyone, and welcome to another deep dive. Today we're taking a look at Synopsys. That's SNPS, if you're following along on your brokerage app at home. Ever heard of them?
Maybe not, but I can almost guarantee you've used something that relies on their technology. We're talking about the software that's used to design pretty much every single computer chip out there, from the one in your smartphone to probably the one in your fridge these days.
Okay, so they make software for chips.
Yeah.
Got it. But why should we care about them?
Yeah.
What makes this deep dive worth our time?
Well, for starters, think about all the hype around AI lately. It's not just hype, though, right?
Yeah.
It's driving a massive demand for these super complex chips that can actually handle all that, learning and processing. And guess what? Synopsys is the company that gives engineers the tools to actually design those chips.
So they're like the pickaxes and shovels during the gold rush. Except the gold is artificial intelligence.
Exactly. That's a great analogy.
I'm into it.
Yeah.
But I'm also seeing a lot of articles with analysts all over the map about where Synopsys stock is headed. Some are saying it's a rocket ship. Others are saying, to pump the brakes.
Yeah, and that's what makes this deep dive so interesting, right? We've got all these different sources, a dense financial report, some analyst opinions, even snippets from the latest earnings call, and we're going to try to break it all down. Is Synopsys really worth the investment? I guess that's what we're going to find out.
All right, so they're essential to the AI boom. Got it. But
Okay.
before we go too far, let's back up for a sec. What exactly does Synopsys do that makes them so important in the first place?
They are the leaders in electronic design automation, or EDA for short. Just imagine trying to design the circuitry for a modern computer chip. It's unbelievably complex. It's like 1 billion times more complex than a city's subway map. And Synopsys provides the software that allows engineers to actually make sense of that complexity, and design and test the chip without completely losing their minds.
Okay, so basically they're the ones making sure that the brains of our devices actually work.
Yeah, pretty much no pressure, right?
No pressure.
And this is where the idea of their wide economic moat comes in. It's kind of a fancy way of saying that they have a huge competitive advantage because, think about it, engineers get trained on Synopsys specific tools, right? So switching to a competitor would be like learning a whole new language. It's a massive undertaking.
Yeah, plus, I'm guessing companies don't really want to mess with something this important once it's actually working. Time is money, right? Especially if you're trying to, get the next hot AI gadget out there before anyone else.
100%. And that's why this whole AI boom is such a sweet spot for Synopsys. Not only are their tools already industry standard, but now the demand for even more powerful AI-specific chips is going through the roof.
Right, so the market's hot. Their tools are essential. Sound like a slam dunk to me. But let's get to the numbers. What does their recent financial performance actually tell us?
Well, the top line revenue was actually down a little bit year over year, which, at first glance might seem like a red flag. But if you dig a little deeper, their design automation revenue, the core of their business, remember, was actually up 4%. And not only that, but they actually beat their own projections.
Wait, so even though their overall revenue went down, their most important segment actually grew. What's the story there?
That's what we're going to unpack. I think part of it is probably due to, the global chip shortage that's been impacting everyone lately. But their ability to still grow in their core business area, I think, is a really good sign. Plus, their earnings per share, even excluding some one-time costs, were also above what they initially projected.
Okay, so even with a few bumps in the road, they're exceeding expectations. That's got to be making investors pretty happy.
Yeah, it's definitely a positive signal, right? It suggests that they're running a tight ship. They're adapting to, the changing market conditions, and they're still finding ways to grow. But of course, no investment is without risk, and we're just scratching the surface here.
All right, cliffhanger alert. Sounds like we've got a lot more to cover. But before we jump to part two, what's the one thing you think our listeners should be thinking about based on what we've learned so far?
I'd say the Synopsys is kind of like the quiet giant powering the AI revolution, but is the market undervaluing their potential? That's the big question we're going to tackle next.
Yeah, that is the million-dollar question, isn't it? And to answer it, we kind of need to go beyond the headlines and really get into the nitty-gritty of, what makes Synopsys tick.
Okay, love it. Let's get our hands dirty. What are some of the specifics from these reports that really stood out to you? What should our listeners be paying attention to?
Well, one thing that really jumped out at me was how much the report emphasized Synopsys' commitment to hardware, which might seem a little strange at first for a software company, right, to be pouring so much money into physical stuff. But there's actually a really clever strategy at work here.
Hold on, back up a sec. Hardware, like they're building their own computers now. I thought their whole thing was software tools. Right. Their core business is definitely software. But remember when we talked about those crazy complex AI chips? Designing and testing something like that requires a ton of processing power, way more than your average computer can handle. So what Synopsys is doing is they're investing in these specialized supercomputers specifically designed for chip development.
Oh, so it's like they're not just giving the engineers the blueprints, they're building the construction site and supplying all the heavy machinery too. That makes sense if you're dealing with the cutting edge of AI.
Exactly. They're creating this whole ecosystem where everything works together seamlessly, and it gives them a huge advantage over their competition. And speaking of competition, another thing that caught my eye was Synopsys's recent acquisition of Ansys.
Ah, yes, acquisitions. The corporate world's favorite way to flex their muscles. What's the scoop on this one? Why ANSYS?
Well, ANSYS is a major player in simulation software, which is basically a way to virtually test how things are going to work in the real world. Think of it like virtually crash testing a car.
Hmm.
But for computer chips, and by bringing ANSYS on board, Synopsys is really beefing up their ability to not just design chips, but to really make sure that those designs will perform under pressure.
Smart move, especially with AI chips, right? Where even a tiny error could have huge consequences. You don't want your self-driving car suddenly forgetting how to brake because of some, software glitch.
100% reliability is key, especially when you're dealing with AI applications that have real-world consequences. So this acquisition, to me, it really signals that Synopsys is thinking long-term. They're making sure they've got all the pieces in place to really dominate this market.
Okay, I'm getting some serious chess master vibes from Synopsys right now. But what about those investor concerns we talked about earlier, the slowing growth in China, the supply chain issues? Did Synopsys address any of that head on in their earnings call?
They did, and I thought they were surprisingly transparent about it, which honestly can be a really good sign regarding China. They acknowledged the slowdown, but they emphasized that they have this long-term strategy in place. Now, that might sound a little vague, I know, but they went on to explain that they're actually building deeper relationships with Chinese companies and really tailoring their products to that specific market.
Okay, so they're not just saying, oh, well, China's slowing down too bad. They're actually trying to adapt their game plan.
Right.
What about the supply chain headaches? Everyone seems to be struggling with those lately.
Yeah, Synopsys is no exception. They admitted that demand for their new hardware systems is actually outpacing production, which is, kind of a good problem to have. It means people want what they're selling, but they made it clear that they're working to, ramp up production as quickly as possible.
Okay, so it's like a temporary bottleneck, but they're, on top of it.
Yeah.
What about that dip in their design IP revenue we talked about earlier? Did they offer any explanation for that?
Yeah, and this is where things get a little interesting. They basically said the decline is partly due to customers wanting more customized solutions rather than those, pre-designed IP blocks we talked about.
So instead of just buying off the shelf parts, companies are wanting more, bespoke, tailor-made chip designs.
Exactly, and Synopsys actually sees this as an opportunity. They're betting that by offering more flexibility and customization, they can capture an even bigger share of the market.
It's a bold move. It's kind of like shifting from selling mass-produced clothing to offering like high-end custom tailoring, higher risk but potentially higher reward if they can pull it off.
And they've got the track record to back it up. Remember, this is a company that's consistently been at the forefront of innovation in chip design. They're not afraid to adapt and evolve with the market.
Okay, so we've got strategic acquisitions, a focus on cutting-edge hardware, a willingness to pivot based on customer needs. It seems like they're checking a lot of boxes here. But before we get to the final verdict, is there anything else our listeners should be thinking about?
Well, we've talked a lot about Synopsys' strengths, but what about their potential weaknesses? Are they putting all their eggs in the AI basket? What happens if that hype cools down? Those are the questions we're going to try to tackle next.
Oh, good point. Got to consider the risks, too, before we jump to part 3. I want to remind everyone watching that subscribing to our channel is the best way to support these deep dives, and make sure you hit that bell icon so you don't miss out on future episodes. Now, back to those risks. Okay, so we've seen Synopsys' strengths, right? We've talked about their strategic moves, their willingness to adapt. But as with any investment, we got to talk about the other side, the risks. What are the potential, potholes they could hit on this road to AI domination?
Well, you hit the nail on the head, right? Because no investment is a sure thing. And I think one of the big concerns that some analysts have is, Synopsys' heavy reliance on this whole AI boom. What if that bubble bursts? What if the growth slows down faster than everyone's expecting?
Yeah, it's a valid point, right? It's like they're putting all their chips on one, really strong horse, but you never know what can happen in a race.
Exactly. And so the question becomes, how diversified are they really? Are they so focused on AI that they're neglecting other markets that could be, pretty lucrative?
Well, they did mention in the earnings call that some sectors like, PCs and mobile are starting to show signs of recovery. Does that offer any reassurance?
It's a start for sure, but those markets aren't exactly experiencing the same kind of explosive growth as AI, right? And while Synopsys did talk about adapting to customer needs, there's always a risk that they could become, too specialized, too focused on the bleeding edge, and maybe miss out on opportunities in those more established markets.
So it's a balancing act, right? They need to stay ahead of the curve in AI, but also keep an eye on those other areas to make sure they're not, missing the boat. It's kind of like a
Yeah.
tightrope walker, one wrong step.
Yeah. One wrong step and it's all over. And another risk factor to consider, of course, is the competition. Synopsys might be the king of the hill right now, but there are other companies out there who are, gunning for that top spot.
Like who? Give us some names. What companies should our listeners be keeping an eye on?
Well, companies like Cadence and Siemens EDA are major players in this space. And while Synopsys has a pretty comfortable lead right now, the competition is fierce. These companies are also innovating. They're making their own acquisitions and they're trying to, lure away customers.
So it's not enough for Synopsys to just, sit back and relax.
Yeah.
They have to keep pushing forward, coming up with new solutions and making sure they stay ahead of the game.
100%. And I think that brings us to, another potential risk execution. They might have all the right pieces in place, but can they actually deliver on these ambitious plans? Can they integrate those acquisitions smoothly? Can they scale up production to meet that, surging demand? Those are all questions that investors need to consider.
Yeah, it's one thing to have a brilliant strategy, right? It's another to actually execute it. There's always a chance that things could go wrong.
Yeah.
Unforeseen challenges could pop up and they might stumble a bit along the way.
Absolutely. And so, it's not just about looking at their financials and their market position. It's also about, really assessing their management team, their track record, and their ability to, navigate these really complex waters.
Okay, so we've laid out the risks, the potential downsides,
Yeah.
but let's be real. This is a company that's been a leader in its field for a long time. They've weathered, plenty of storms before they've adapted to changing markets, and, they've consistently come out on top.
That's true. And I think that's a really important point to emphasize. While there are definitely risks involved, there's also a lot of potential upside here. I mean, they're riding this massive wave of growth in AI. They've got a really dominant market position, and they seem to be making all the right moves.
So the big question is, do the rewards outweigh the risks?
Yeah.
What's the verdict? Are you bullish or bearish on Synopsys?
Well, I'm not in the business of giving financial advice, and, every investor needs to make their own decisions based on their own individual, risk tolerance and investment goals. But I will say this Synopsys is a fascinating company operating in a really dynamic and rapidly growing market. They've got a lot of things working in their favor, but they're also facing some real challenges.
So it's not a slam dunk either way. There's a lot to think about, a lot of different factors to weigh, but that's what makes investing so interesting, right? It's not just about, numbers on a spreadsheet. It's about understanding the stories behind those numbers, the companies, the people, the trends that are really shaping the world around us.
Yeah, exactly. And I think that's what we try to do here on the deep dive, to give you guys, the information and insights you need to hopefully make more informed decisions.
Absolutely. And speaking of informed decisions, if you found this deep dive helpful, please do us a huge favor and consider subscribing to our channel and hitting that bell icon so you don't miss out on future episodes. We've got lots more, fascinating companies, market trends to explore. So join us on this journey.
Thanks for tuning in.